Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 6th of August 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. And of course, as it's a Monday, we'll look at things from a weekly perspective. And I just wanted to highlight a few significant moves as far as I'm concerned we saw over the last week. First of all, the dollar gaining ground against the euro, against the single currency, adding 1.25% against the single currency over the week, despite the fact that it did look at times as though the euro was about to firm up and push on, but that's not been the case. And sterling as well, down by just over 1% against the US dollar, flirting below that 130 level. Brexit uncertainty really, comments around that driving the pound lower. Will the pound be able to regain 130 over the course of this week is probably the key question as far as sterling traders are concerned. And then elsewhere, the US dollar making gains against the Swiss franc. I'm not entirely sure what the reasoning behind that is, but for the dollar to be gaining against a safe haven currency, it says a lot about dollar strength. And if we look farther afield, we can also see that the greenback has pressed on against the South African rand, adding 1.42% over the last 7 days. The dollar, for its part, as dollar index trading at 95.29 shortly before we recorded the video. So above that 95 level, will it be able to stay there? Again, I think that's probably the other main question for this week. Can we see the dollar assert itself above that key 95 level? It hasn't been able to do that in 2018 to date. Okay, let's have a look on the calendar. Events that may move the markets today. Quite a light calendar really. Still one or two bits for us to get our teeth into. Be aware, first of all, it's a holiday in Canada today. Data that we've already had out this morning includes commodity prices for New Zealand and the month of July. We've also had inflation data out of Australia, and job advertisements data for the month of July as well. To come this morning then, factory orders data for June out of Germany. That's at 6 a.m. GMT. New orders is an element of economic activity that markets will be paying close attention to, given weaker GDP and mixed PMI data, and of course German factory orders amongst the most important as far as the Eurozone is concerned. Then at 8:30 GMT, we'll have investor confidence throughout the Eurozone for the month of August. A survey data this from Centex, but nonetheless we'll speak to, I should say, the mood of European investors and businessmen. We'll also have loan officer survey data out of the USA this afternoon. That's a report for Q4, effectively a look at the state of the availability of finance in the USA. We'll have at 15:30 3 and 6 month T-bill auctions out of the US as well. And then there's a big gap round to 22:30 tonight, where we'll have performance of construction index data out of the Australia for July. And at 23:01, the British Retail Consortium like-for-like retail sales data for July as well. And then at 23:30, overall household spending data for June out of Japan. So those two data points, the BRC data and the household spending data from Japan, a window, if you like, onto the health of the respective consumers in those countries. Right then, breaking news and comment that's caught my eye. First of all then, the People's Bank of China intervention into the FX market last week steadies the yuan. Australian job ads numbers have recovered strongly in July, gaining by 1.5% versus a minus 1.7% drop seen in June. Saudi Arabia has expelled the Canadian ambassador and suspended trade with Canada over its support for a human rights activist detained in Saudi Arabia. And Iran is to allow inflows of foreign currency into the country in a bid to offset the effects of some US sanctions which come into effect today. Okay, food for thought, something to take away with you into the trading day and beyond. Why not think about this? European stocks have the most exposure to foreign earnings, new research from Morgan Stanley shows. Now that means that they have the most to gain from successful trade talks with the USA and others, but also the most to lose if they turn sour. And in fact, you can see here that the chart that shows us the split of revenues between domestic and foreign, domestic in the light blue, foreign in the dark blue, and Europe comfortably exceeding the US, Japan and emerging markets as far as foreign earnings are concerned. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning. Thank you for your time.